Welcome to Books in the Biz, the show where real-world business meets real-world results. Hosted by business strategist Dan Paulson and veteran CFO Richard Beltry, this podcast breaks down the stories, trends, and financial insights shaping today's companies. Dan brings decades of experience helping leaders simplify operations, build strong cultures, and scale with confidence. Rich adds his deep financial expertise from guiding organizations across healthcare, construction, logistics, and professional services. Together, they dig into what's really happening behind the numbers and what it means for owners, executives, and anyone trying to grow a stronger, smarter business. This is practical conversation, real talk, and tools you can use right now. Welcome to Books in the Biz.
Hello and welcome back to Books in the Biz. Rich, how are we doing this week?
I'm doing well, Dan. How are you?
I'm doing good. I am not fighting with tax season like some people I know, so it's a little bit easier for me. But I'm assuming you're starting to deal with that issue here in the next couple weeks. Probably already into it a little bit, I'm guessing.
Yeah, it's the company stuff. Most of the people that we do company work for are in process. Individuals, I think, are still a little bit delayed by what other documents they're waiting for. A lot of times it's the brokerage houses, etc., that haven't sent them their 1099s yet. So those people are waiting for that document before we'll get flooded with here's all my stuff. So it kind of follows the same pattern. Did you ever see the did you ever see the video of when Mount St. Helens erupted back in 1980? It's like you heard a lot of stuff going on but couldn't see anything, then half the mountain just kind of
falls away. Yep.
I don't mean to laugh. I'm not laughing. I'm laughing at the analogy between that's the way tax season looks. It starts out, you hear a lot of rumbling, and then all of a sudden it just falls out.
Which also kind of leads to our discussion here today, because as we were talking earlier this week, taxes are prompted by accounting. And if accounting is clean and good, your job gets a lot easier. And also this, again, kind of, you can maybe talk a little bit about how the CFO role ties into making your taxes better, not worse. Because I think we were kind of talking about a couple examples before we jumped on here of certain things going on. And I also, while we're sitting here talking, for those of you who are watching the YouTube podcast, I'm pulling up an article from business.com. So Rich can see this here, 11 counting mistakes that cost small business significant growth. I would say, as you read through this, Rich, you're probably going to go, well, it's not just small business, it's also medium business and sometimes even large companies that experience these problems. But I know maybe you want to share some of the stories of what you see as you start going through this accounting season that really, if people start making changes now, are going to make their lives a lot easier, either later into the year when there are more accounting events or tax events coming on, but more importantly, as you get into next year, hopefully avoiding some costly mistakes that could lead to some pretty significant financial burden for you.
Yeah, we don't have enough time because those are the only those are always the things that you remember. You always remember that this was I'll call it the misstep, right? The first one there, seeing that, you didn't hire anybody. Okay, well, sometimes you don't have to hire somebody if you're organized in a certain way. If you're giving me a spreadsheet, but it has everything on it that I possibly need, I can go right through that, especially if I've done it before. If we do that every year, I know what I'm looking for. I did that on one person. They handed me everything, and I looked at it, and the first thing I said to them was, "You forgot the mortgage." because they pay from two different directions. They know exactly what this one was, and they said, "That's what we did last year. Here you go." And this is year two on the client. I'm like, "You forgot the mortgage," and they went, "Ugh," you know. Um, but at least it was organized enough that it was one question. It wasn't
Right.
300 questions. I have another one, basically the same thing. Here, we have everything. It's all set, raring to go. I'm like, none of this makes any sense. Like, it's tell me how it's raring to go. And then they can't explain it. So I'm like, well, when you can come back and explain it, then we can say that it's raring to go, because right now it's not. Um, the the other thing is understanding sort of what the understanding what someone like myself is telling you. So, for example, if you hire a bookkeeper, or you have somebody in house that keeps track of your books, one of the big, I'll call it pet peeves, is if you're in a partnership and the partnership is paying your personal taxes, because partnerships don't pay tax.
Mm-hmm.
So the taxes being paid are yours because you pay on your share of the partnership. If the partnership is laying out funds to pay your taxes, it's not an expense. So when you hand me the books and the books say you made $100,000, and I come to you and say, "Hey, guess what? You owe 137. Your books are going to show $137,000 worth of profit." They
Mm-hmm.
start screaming like, "I can't believe it! It's so much more than we thought it was going to be." I'm like, "Because you deducted your taxes. It's not deductible.
Yep.
It's not an expense. They paid it for you. It's a distribution." So it causes, and usually when I have to have that conversation, it's the fifth year of having that conversation. We've had this conversation already, so that's why I'm saying, listen to what your professional is telling you, set it up in a certain way. And if they aren't telling you that, call me. Because
Yeah, well, I think as you're talking about this, and this is also something we kind of were talking about before we jumped on the podcast here. There's also the government, as how they sometimes label things that are actually a bill, not a tax. So then as the layperson taking your tax example,
yeah.
we assume that's an expense because we're always told it's a tax expense, and in a way it is.
Mhm.
But as you pointed out, it depends which bucket it comes out of. If it comes out of your personal bucket, it is an
Yep.
expense to you. If it comes out of your business bucket, it is technically, as you said, a distribution and not an expense, and therefore the tax is taxable almost, is kind of what you're saying.
Yeah, exactly right. Income taxes was what I was talking about before. You're 100% right. Income
Right.
taxes is in the personal bucket, so it really doesn't belong an expense on the company. That's where you run into issues of things being, handled the wrong way. Um, so yeah, sorry about that.
Yeah.
Um, but
I
yes, something like we were talking about the Delaware franchise tax. They
yeah.
call it a tax. That, yes, that's expense. That's expense to have your business open. But the problem is, it's not really a tax. Delaware's done us all a disservice by calling it a tax. It's really your annual report. Any other state, it probably says annual report, or
Does. Yep.
something that's basically your franchise fee. You know, that's a little different than you use the word tax, and everybody thinks, well, I have to call my accountant. So now your accountant's got 3 hours talking to you about a bill that's going to cost you more for the accountant than it did to just go online and pay the bill. Like, if you don't understand it, get them to explain it, and then move on, because it doesn't necessarily help.
Yeah, and this again is where most of us, unless we have some tax background, can run into some issues where we just don't have the knowledge or the experience, which to me is why it's important to have somebody who does have financial acumen, that is kind of involved in what's going on. And that's where it's not a tax accountant per se, because in my experience, tax accountants are good typically in one lane, and that's doing your taxes. And they might ask you a few questions around that, but the financial planning side of things that go into what eventually leads to the tax costs or savings is really, kind of where you're at right now.
Yep.
I scrolled up further here. Maybe you want to talk to some of these other points. So, like, not tracking business costs accurately. Well, for example, what you just brought up, where you're pulling taxes out of, or you're pulling your income taxes out of the business. That's not a business expense. That is actually a distribution. What are some other things that you see where are common mistakes where businesses or maybe even bookkeepers don't accurately record certain information?
Um, Depreciation is usually one. Officer salary on an LLC is another. A lot of times you don't get to deduct what you get paid.
Mm-hmm.
That it's a disguised distribution that's what went into your pocket, and that doesn't mean that your business. It almost like you have to think of it that the business made the money first and then paid you out of its profit. So the profit can't be net of what you already took. What you take is with after it takes the taxes. You
Mm-hmm.
know, the old joke of asking the genie for three wishes, and he says, "No, I can only give you two wishes." And the guy says, "Well, wait a minute, I thought the deal was always three." And the genie says, "The IRS takes its third off the top." So
There's a lot of truth to that.
there's a lot of truth to that. So IRS takes theirs first. Um, so that's the big piece there. Don't mix your personal. Do yourself a favor. Don't mix the personal in there. It becomes a real nightmare to try to, number one, prove it. And the
Mm-hmm.
minute you have one that goes wrong, they think they're all wrong. So split what you do personally from what you do on the business side. You know, um, I realize that it can get easy to keep your books, and when you spend money and it has to be personal, then um, you record it. I mean, at least you're recording it. At least you can track it. But if you're not tracking it and everything's kind of going through the profit and loss statement, you're setting yourself up for a problem. I mean, I took over an account one time where they told me that the prior accountant told them they could deduct their groceries.
Mm.
And I said, well, I would love to meet that person and have them show me somewhere in the code that says groceries are a deductible business expense. um, but these are things that you don't want to do. The code section literally says something to the effect of ordinary and necessary business expenses. I don't think groceries fits. Groceries does not support the business, so therefore they are not ordinary and necessary.
And if you ever get audited, you have to be able to reasonably explain why that is a business expense, which if you are unable to do, or if it seems like a BS excuse, that's just going to lead to bigger problems down the road. That's at least been my experience. I guess what I've seen, and this isn't typically true of the clients we're talking about, but I had a relative that was involved in multi-level marketing. For those of you who don't know what that is, think Amway or Shackley or any of those companies. A lot of times they promote the idea that, well, you can turn everything that you do into an expense. And they would bring up those specific examples. So that's not the first time I heard that, well, you can go out to a restaurant or you can buy groceries and, somehow this lumps into a business expense that you can now write everything off. And I really struggle with that mindset. There are certain things that are business expenses. There are certain things that are not. If you ever have a question, you should have, again, a financial professional who can go through it with you, because a lot of it does come down to intent. What's the intent of the purchase or the expense? And if it's justifiable, maybe somebody like you would say, yeah, that one's probably going to go, that would be okay. We can at least make a good argument for that. We may not win the argument, but we've at least got justification for it. Where, as you pointed out, groceries, probably not.
Yep.
Most vacations, probably not.
Yep.
You really
Gym,
just got to be careful with that.
the gym membership was a big conversation. The person that kept asking me, he was stuck on, I want a gym membership. I want my company to pay for it. Company can pay for it, but it's going to be in your salary. Like,
Right.
it's a de minimis expense. That's the way it works. You know, I could not get it through to this person that you can't do it. Um, you know, it's again, you can't just spend your way to a tax deduction. It doesn't work. It's no money in your pocket, and the government's only giving you a piece.
Right. Yep. Another thing that's on this article, which you'll be able to see if you're on the YouTube page for this, is inefficiency for managing your billing. I'm sure you have experienced that, where billing practices are far from efficient, and often, you know, I guess what I often see is where there's a lot in the receivables that fails to be collected, and nobody's doing the job to get that money back
Yeah.
into their pocket.
Yeah, if you ever get into the point where you've got a company that is struggling and you hire someone to come in and help you fix the company, help you survive sort of a downturn or whatever's going on with the company, one of the first things they want to do is speed up your receivables and slow down your payables. So they want to collect faster and pay out slower. Why? Because it
Mm-hmm.
puts money in your pocket, right? It puts take that back. Okay, because that's the buzzword. It puts money in your pocket. No, it puts money back in the business to allow the business to solve its struggles. Okay, and if you're not billing on time and you're not collecting on time, then that's one of the hugest problems that you can solve. A matter of
Yep.
getting things a couple of days faster could be enough to put you back on the right track. So, putting those two pieces together, I could almost guarantee you that would be one of the first things they look at. Can we collect faster?
And that's often what I see too is, and I don't know what the mindset is with a lot of business owners, but it's almost like they're afraid to collect the money they earned. They
Yeah.
don't ask for it, they don't reach out. And there are some companies out there that will treat you like a bank. You pointed out,
Mhm.
collect the money quicker, spend it slower, or pay it out slower, because you can hang on to that cash flow and that churn. And I see companies do that 60, 90, sometimes 120 days, and they're not even hesitant about holding back on that cash. Well,
Yep.
if you're not getting paid for 120 days on something that you have to expense out today, and you don't have the cash flow for it, that can be a real problem.
Yep. Um, yeah, and I think that the there's a tweak in there too. If you're looking at it and you see that you've done that, you've collected faster, you've paid out slower, but then the money still goes out. Small businesses do this all the time because there's such a fine line between the small business and the owner. So the owner may have his own or her own cash flow problem.
Mm-hmm.
So if you've done the receivable thing where you've collected faster, the payables are slower, but suddenly the money's still gone and it's in the owner's pocket, that tells you that the business may not be the problem. It may be the fact that the owner needed the cash, and that becomes sort of your red flag of, did I know this already?
Yep.
Or am I supposed to be asking for the next level? Should I go down and say, well, how you doing personally? You know, it's it's sort of part of the issue of being Sherlock Holmes for a while. You start out with the big eyeglass trying to figure out, well, where's the real problem. So
Yep. Well, and that ties into kind of the next point on this article, which is not planning your taxes properly.
mhm.
How many people start working on their taxes really kind of the first part of January, or maybe even the first part of February of the following year for the previous year's taxes.
Yep.
At that point, decisions are made, money's been spent or collected, and there really isn't much from a CFO side of things, or even a tax professional side of things, that you can really do other than bite the bullet and deal with whatever's coming down the pipe.
Yeah.
Now, again, there are certain companies that I think are less complex than others, which, doesn't involve dealing with, constant tax planning throughout the year. But, even a lot of small businesses that if you work throughout the year to, know what you're going to owe or know where you're going to pay or know where those tax events that you can put in place, maybe to reduce some tax burden come in, that can be quite helpful, can it?
I always tell people a lot more in the last few years. I've reminded people that the advantage of hiring someone with either a lot of experience or the CPA, license, people who've done this for a bit, the values in the planning, the values in the understanding it, the values in minimizing the rate. You're not going to get to zero. All these people out there on Facebook saying they're going to get you to zero, I highly doubt they're going to get you to zero without spending all of your money. That's the only way I think that people truly get to zero. If you get to zero in any other way, it means you're not making any money.
Right. Yep.
And that's you can tell me that you solve these problems for 1,000 people. Those 1,000 people they're not making any money. They're miserable.
Right.
So make them less miserable. I'll be very attentive. So the problem I see again are those people that are saying you're going to get to zero. Get someone in there who can work with you to manage the number, and if you're in the top bracket, good for you, I say, because that means you're really making money.
Mm-hmm.
There's cash coming in, there's investments coming in, there's something else that's making you, earn a 37% tax rate. Okay. And then you should be doing different planning. Should these be in trusts? How do you protect it? Shouldn't that be everybody's goal, right? Get to the top. You get to the top bracket. Now everybody says, oh, they pay less taxes. I got news for you. I've seen some big checks get written, for people that are paying a lot of money in taxes. So stop telling me that the top doesn't pay, Yeah, I'm sure there are a few who have figured out how to not pay. Okay. But let's not focus on them. Focus on everybody else who is paying. And again, just hire someone or bring someone in that you can trust that basically will go over it with you and come up with, do I have legitimate strategies? And do the strategies not cause me a ton of extra money or a ton of extra admin time that I didn't want to spend? So, feel free to look at somebody who's actually going to, help you with your specific situation, because the guy next door doesn't have your situation.
Yep. Well, and that kind of goes back into last week's episode where we were talking about, somebody brought in a certain event that they were expecting was going to save them money. And in the end, by the time you add up the administrative costs to it, really probably was a wash. We're hoping that in future years we can show kind of a benefit to that or a positive. But again, that was a mistake of the owner by thinking, they believe somebody said was, they were going to save all this money. Well, you save money in this pile, but then you have to spend it in that pile. Did you really gain any true benefit of it other than increasing more stress for you and more burden for your company? So that's not always the case. Some other points on here, failing to classify employees properly.
Mm-hmm.
Now, maybe you can explain that one better. Where do you end up misclassifying an employee?
1099.
So
if I have not seen a lot of it. I've come across it a few times in my career. But the IRS does not it's not that they don't like subcontractors. They don't like when people are classified as subcontractors, quote unquote, willy-nilly. Okay. There is a test. It used to be a 20-point test. It's changed a bunch of times, but majority of it comes down to control. I'll simplify it very, very much. So please don't use this as I saw this on the podcast and, he said, no. It's an individual's, You go through and you decide this person is a subcontractor, not because it's going to save you on taxes. They're a subcontractor if you hire, you hired John to paint your house or to come in and paint your building or do some construction work. And, you don't control him. If John comes in on a Saturday, then he comes in on a Wednesday. You don't control his schedule. You don't control just about anything of it. John is in control. Now, if you have somebody who works for you 40 hours a week and you tell them to go do this job and you tell them to go and, do it specifically your way and you have all the control. He's doing exactly what you told him. Okay. That is not a subcontractor. By rules, that is an employee. Okay. And if you did not classify them as an employee, and somebody comes back 3-4 years from now and says, guess what? Here's your penalty. Here's all the payroll taxes on it. You can't go back to the employee and get it from them. The responsibilities in the employer's, it's the employer that has the responsibility of deciding whether they are a subcontractor or an employee. And if you do it wrong and you get penalized, there's nowhere to go. You can't go to the employee anymore. You could try if you want to, but that's a very Tony Soprano move. Okay. It's not legal. Legally, It says you don't have any recourse to go after the employee. Okay. So that's where there's a discrepancy there. You have the responsibility to decide, do it right, because it's not easy. It's not easy to go back and fix.
Yep. And that is often the case I see where, there's several employees that are classified as 1099s. And I often caution people I know or clients, you are in a situation that is not as gray as you think it is. And it would only take a few tests from the IRS to determine that this person's not a 1099 contractor for you. They are actually an employee because, like you said, they're expected to work a certain time. They are directed on what their work is supposed to be, how it is supposed to be done. I mean, those are just a few key factors that become real easy, low-hanging fruit for people to pick and go, okay, that's actually an employee.
Yeah.
One thing this article also brings out is going paperless. We now live in a society where, for example, QuickBooks, I don't even know if QuickBooks makes a desktop version of their software anymore. But either way, a lot of stuff QuickBooks was doing then was paperless. I think there's been. You gonna make it there? You gonna live?
I'll make it. I'll live.
There's a lot of stuff there that has kind of pushed us to utilizing technology. But if you don't have a backup, you could be in some serious trouble. And I don't know if, as far as we refer to this, backups are not only backup files on your computer, but actual paper backups. Paper is still king in the tax and accounting world in a lot of cases, isn't it?
Yeah. There's always the worry when you use somebody like QuickBooks, because if QuickBooks was to go down, how do you get to your data?
Right.
The likelihood is low because somebody like QuickBooks is so big. There are multiple redundant systems to make sure that the data does not go down. So I'm a little less worried about that anymore. I used to be big worried about it when it first was becoming, how do I do this? But yes, make sure you have something. Make sure you have, if QuickBooks goes down, everybody's down. So it's going to be a pretty good answer to tell the IRS if they were to come in and say, hey, we want to see your books. And you can say, look, I'm part of the big QuickBooks outage, but at least I have my profit and loss statement and I have, my balance sheet. I have some of the backup for this stuff. And then you can't, rely on anybody else on the taxes, right?
Yep.
A CPA, if you go through the CPA's rules, I believe the CPA is required to give you a copy of your tax return. uh, 3 years down the road, when somebody knocks on your door and says, "Give me your tax return," if your accountant is no longer your accountant, or if your accountant tells you they're going to charge you for it, they have every right to do that.
Mm-hmm.
If you have a good relationship with whoever that person is, you probably will never have this conversation, because you'll just make a phone call and the tax return will appear, or, in my case, you'll have a portal that you can go to and you can pull your documents out. You can pull whatever I have would be available to you. But there's always that question of, what do I do if I don't have a copy? Well, nothing. There's nothing to do. You have the responsibility of keeping the copy. So I see a lot of people that, a year after, we did the tax return, I'm getting requests for another copy, because whether it's for a mortgage, whether it's for an audit, whether it's for, any other reason that they need the return for, they're always asking me for it. I'm not responsible beyond the first copy that I gave you.
Yep.
So, beyond that, if I wanted to charge for it, I could, but I don't. But I'm saying, I see these things, and these are bad trends. They're just basically saying you're not taking the responsibility for it. As a side note, here's a good little story. I had somebody actually who turned around, and we had cleaned up their QuickBooks after they had a cyber scare. Somebody actually hacked their bank account.
I was going to bring that up. Yep.
And all of these documents were missing. All their QuickBooks was 6 months behind. And when they were going through it, one of the owners basically said, "Well, we do all this stuff for you, right?" And I said, "No, you're not doing it for me. Does it make my life easier to not have to go through all this to figure out what your number should be? Sure. You're not doing it for me. It's for you. And if you're not utilizing it for you, then we have a much longer discussion that we have to have tomorrow." Because some people don't realize, like, we're not doing this just because we have to. We're doing this because it should be giving you answers. It should be telling you how to make tomorrow's decision. Like, I have books that I can look at that tell me, here's my numbers. And then you can figure out whether you're going to make a decision to spend the money, not spend the money.
Yeah. And, that's where I think a lot of owners really need to be careful with, what they do, how often they update. I, like you, see books that either haven't been updated in several months on the client side. On the other side, though, and this is a knock against accounting firms, but we've talked about this in the past. I see a lot of accounting firms that, either due to staffing problems or whatever else, are also behind on entering information that they have been paid to do and providing those P&Ls and those balance sheets on a regular basis like they're supposed to do. It's in their agreement, but for whatever reason, they're now 3 or 4 months behind. So it's up to you as the business owner to make sure that whatever you've signed on or whatever you paid for, you're getting from your accounting firm or your bookkeeper, to make sure that everything is up to date. Otherwise, you could find yourself in a situation that's going to be painful in the future. Some other issues up here of this article that I think are important to point out: overstating cash flow and tracking income and expenses incorrectly. And to me, these two kind of are in some ways different but the same, because what I find in most cases when you overstate cash flow is because you're not tracking your income or expenses correctly. So you can tell me if that's any different or where that would occur. I'm sure sometimes companies or business owners, especially small business owners, maybe want to overstate income for certain reasons and understate it when it comes time to actually pay taxes on it. But, what's your experience?
Yeah, I could tell you this. Okay, everybody likes QuickBooks Online. It's a very popular product. Everybody uses it. It's a well-used term in the small business market. I've got people who go very, very far into beyond where they should have quit QuickBooks. They're still trying to use it. And the reason I bring up QuickBooks is because their cash flow report is horrible. Don't know if they've improved it. I haven't really tried to push it, but 9 times out of 10, I try to do the cash flow statement myself. Like, I try to get an idea of, do I really understand what's in here? Because the way that QuickBooks actually works is that it goes by the transactions that go through your bank account. So if you're in a business that anywhere along the line uses journal entries and does things to fix, problems or to adjust accounts without going through a bank account, it will show up funny on the cash flow report.
Amen to that.
It will
Yeah,
separate itself.
I can speak to that directly because when I pay myself my income, I'm not using a payroll tax system. So I'm basically told by my accountant, here's what you pay yourself, here's what you got to take out in taxes and whatnot. And of course, part of that process is then I have to cut myself a check to pay me. Well, I have to go a rather convoluted way to make that happen because even if I enter the journal entries, it doesn't lead to me being able to cash a check. So they have not fixed that problem. I guess we'll just state it there. They have not fixed that problem. So it does make it rather difficult when it comes to that time and how you record that information because it adds about 2 or 3 more steps to getting that accounting right and making sure the numbers are right because of how QuickBooks handles it. So you are absolutely correct on that. And the other part of this we were talking about is not tracking income or expenses accurately.
Mm-hmm.
Many times what I see, and you probably observe the same thing, is there are certain things that are listed as expenses that really go on the balance sheet and vice versa, which then makes your job a lot more difficult, especially when it comes to that tax time, because people are, taking, for example, a car loan or something like that, and they're recording that whole car payment against as an expense, but really it's not. It's got to be broken down separately because there's tax or there's interest expense. That's right. But then there's the equity you're paying off on the vehicle, and that's got to be recorded separately.
The other side of just final, I guess my final add on to that overstating cash flow. If your cash flow statement or anything that comes to you is showing you as having overstated cash flow,
Mm-hmm.
The biggest scare is you think you have more money than you do.
Yep.
And so remember, the big thing about the bookkeeping is not for me. It's not so I can file taxes. It's so that you know how much money you have. It's so that you know what you can spend. So you think you can spend $100,000 and then the accountant comes in and suddenly that $100,000 is zero. And you're going, wait a minute. As of yesterday, I had all this money. Where did it go? Anywhere. Just the books were wrong.
So the other side of that with the income and expenses, then are there other ways that you see companies making mistakes on that?
I think the big one is paying themselves. The second one is paying the taxes. Depreciation can actually wind up being a good answer because nobody understands depreciation.
Not really. No.
So, usually it winds up that you have an expense that you didn't know you had. So, hopefully that's the good side of, offsetting the fact that the other adjustments go the other way and are bad for people. I don't think I've had any big ones recently that would be outside of that. Yeah, I don't think no surprises. If we have surprises, we'll have another podcast.
Yeah,
because we'll have another story to talk about. But and I, my caveat, I don't want everybody to think I just sit around laughing or joking. That's the podcast. It's all serious stuff. It's just that when it becomes a trend where you see it 5, 6, 7 times, you realize that everybody's doing it.
Right.
So how do you fix the fact that everybody's doing it? It's a mindset. It's how everybody, works. So you can
I also think is bad information out there because most of us go to LinkedIn, Facebook, Instagram, whatever, you see something posted. It's like, oh, you can do this or you can do that. And nobody asks the question of really, can you do that? Or should you do that? Or can you do that and somebody got away with it, but it only takes, the IRS to catch you, and now you got a fine on something that you thought you was the right thing to do but wasn't. And that's why I like you put the disclaimer in earlier. We're not giving financial advice, we're not giving accounting advice here. We're just pointing out observations that we've seen through our connections with our clients or with other people that have tried to hire us. As we look at this article, just to kind of finish up here, there's two things that once you read the article, they're rather short. One's forgetting to pay your invoices. I don't think you or I need to spend a lot of time on that. If you can't remember to pay your invoices, given all the technology and everything else that's out there, because most companies will send you reminders, you need to pay your damn invoice. Plus, you can set reminders for yourself as well, or set up auto payments. But the last one, even though they really don't dig into it that much, I think this is one that is often overlooked. And number 11 on here is missing signs of fraud. And in the 20 some years that I've been running my company, I can think of at least 3 or 4 times over that 20 years where we've ran into fraud situations. And I got to believe that you see probably a lot more of that potential risk on your end, given the CFO work and the accounting work that you do.
Yes, unfortunately, because, as an auditor, everybody always disclaims that we don't have the responsibility of finding fraud. We're not there to actually go and find it. The problem is it finds you. It can really come out and show you that this is what's going on, and it doesn't make a whole lot of sense.
Yeah.
The personal expenses on the company turns out to be a big item, because that really becomes, if you're trying to deduct those as business expenses and you don't have the backup for it or the good argument for it, that's a I hate to say it, but that's a fraudulent attempt. That's a fraudulent piece. You're not, you need to be somewhat responsible for, is this legitimately a business expense? It gets pretty hairy when you get in there and you start realizing that some people, when they get away with one, you realize that the intent was there, and then they try for number 2, and then it's number 3, and then it just keeps kind of growing. And so that's where these big fraud cases came from. I don't look, you can go back and everybody wants to blame, you go back and you can talk about Enron. It goes way back in the history here, but that was a fraudulent situation. Then you go to Bernie Madoff. That's fraudulent situation. The question there is, what was the intent? I always go back to this. A long time ago, I actually watched some of the congressional hearing of Jeffrey Skilling at Enron. Okay. And I watched it as it was happening, because obviously it was years after the failure of the company.
Right.
And he tried to blame, I'm not an accountant. Then all of a sudden he went into this description of what a derivative was. It sounded like I was listening to a nuclear physicist. Okay. Stop trying to tell me that you're not an accountant. You knew exactly what was going on.
Yep.
Okay. That's why you got what you got. Okay. So, and you made everybody believe that this was the right way to go. Okay. All your employees followed you into Hades.
Okay. Whether they realized it or not, I think in some cases, they probably didn't realize what was going on, and everything was just wonderful, and the sunshine, unicorns, and rainbows, and then all of a sudden, crap hits the fan, and now look at what you've got. And I would, so if you watch the podcast here, I scrolled back up to points 8 and 9 again. So overstating cash flow and tracking income and expenses incorrectly. To me, these are 2 early red flags for potential fraud situations. If you are a business owner and you can't explain or justify away these 2 points, because it's not just fraud from the business owner side of things. I see employee situations. In fact, just recently here in our area, there was a school employee who had taken some tens of thousands of dollars from the school funds, and of course then resigned, and then ended up paying all the money back because they were eventually caught. And usually it stems from one of these two issues. Either the cash coming in is higher than what can be justified or what can be measured, and the same with when you look at income or expenses. If those two things aren't aligning like they should, that should alert you as a business owner. Maybe there's some other things you got to check into. And that's when you send somebody on vacation and bring in a forensic accountant to start looking into why are these numbers off the way they are. And there's been, like I said, a couple different clients that we've gone through situations, and you're looking at the books and going, these numbers just they don't match like they should. And sure enough, by the time you're done, you've found somebody who's taken thousands of dollars, tens of thousands of dollars. In one case, it was $250,000 that we could track, and that wasn't everything that we knew that person was taking. That's just what we could physically prove. Yep. So it's pretty easy for fraud to happen, especially when you have people that are doing your books or managing your money and there are no checks and balances in place. So you really need to make sure that happens. Yep. Rich, so if somebody has a question, especially right now, since it's your busiest time of year and I'm sure you got nothing better to do, how can they get a hold of you? What's the best way to go about asking you how to fix or prevent some of these problems?
Best way is send me an email at rich@xcxo.net.
And if for some reason there's the operational side of this that needs help, you can contact me at dan@xcxo.net. Rich, a long conversation, but I think a good one, addresses a lot of points as people are starting to plan for their tax season this year. And hopefully, God forbid, we start sounding like a broken record, not only this year, but planning for 2026 tax season. Get ahead of it now so it isn't going to be a problem in the future. Rich, thanks again, and we will talk to you next week.
All right. Talk to you later.
Thanks for listening to Books and the Biz. If today's conversation sparked new ideas for your company, the team at XCXO can help you turn those ideas into action. XCXO brings together seasoned executives, fractional CEOs, COOs, CFOs, and CXOs who step into your business with the experience, strategy, and leadership to drive real results. Whether you're trying to scale, strengthen operations, improve profitability, or prepare for transition, our experts help you move faster and lead with confidence. To learn more or start a conversation, visit xcxo.net. That's xcxo.net, your shortcut to stronger leadership and a better run business. Thanks again for joining us. We'll see you next time on Books